The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and The Tech Insider, David White.
And everyone, welcome to another wonderful edition of the Power Trading Hour with me, your humble, lovably, squeezably soft host, David White. It is October 3rd, and we're seeing a little bit of volatility in this market. Was a little bit surprised to see the market break the 1686 level, which has been tested a few times. Of course, we were we're off 13 points now on the S&P cash, but we were off another 10 points lower than that earlier in the day. And we'll get into the reasons why, but pretty much political. But it's kind of tough to see any kind of real energy to the downside. We only have about 2 billion shares on the consolidated New York Stock Exchange tape as we speak. But it will be interesting. Anyway, we'll get into some other stuff. On this a day in 1995, the end of a sensational trial. Former football star O.J. Simpson is acquitted of the brutal 1994 double murder of his estranged wife and her friend Ronald Goldman. I always wondered why that and her friend. They were a little bit more than friends, and everybody knew it. But it was always just his friends. Now, everybody knows that he was guilty. I don't think anybody has any real belief that he wasn't. But they were able to gin up enough, how can I say, gin up enough anger in the community to make it a black and white issue when it had nothing to do with it. Basically, Nicole Simpson was one of those kind of gals that was more than willing to rub stuff in his face. He was the kind of guy that had a horrible and brutal temper. All she had to do was keep giving Ron Goldman his Ferrari and let him drive up and down Rodeo Drive enough times, and O.J. snapped. At least that's the way pretty much most of the police believe that it happened. And, of course, it wasn't just like I kind of poked you with a knife. He almost he cut Ronald's throat, but almost beheaded Nicole Simpson. And, of course, there was a long list of recorded conversations of him threatening to kill her. He had a pretty brutal upbringing, and it never changed throughout his entire life. Of course, a lot of things didn't make it into the first trial that made it into the second trial. So we finally found out what the truth was when a lot of the stuff was blocked because they were afraid of retrials and other things by the judge, who he probably didn't run his court run too well. Since then, almost everybody that's been a judge has done much better in the face of the public. I think maybe he was new, and of course no one else had really been covered that hard, but I think of current court cases where they've done a much better job of controlling the theater of the court, especially down here in Florida over the summer. But it was the end of an epic 252-day trial. And a lot of people say we're divided today. I can remember probably a court case as this that divided America down racial lines, and on purpose. The question is whether or not he just got off so a bunch of people wouldn't go loot and burn all of Los Angeles. Well, tough to tell, but he finally ended up in jail, and probably where he belonged. And we'll find out one day when he meets his maker what exactly he is liable for. But I remember this day because we worked, of course, in the video industry. And can you imagine having, we probably had 25 broadcast quality, at that time, tube televisions. These things were $3,000 or $4,000. Not a one of them hooked up to an antenna. Not a one of them. So we had to go out and rig up on a ladder and step stool a TV and an antenna out in the front of our office so we could watch the court case be read. I kind of vaguely remember. It's a very nice day for October 3rd in Cincinnati. I kind of still remember. Maybe it was just a little cool, but the sun was out and it was a great day. And kind of very interesting to see just, 18 years later how this been received. We did start to break down about, 10 o'clock or so. The problem with giving every kind of news story a belief of what it's done to the marketplace is that there is no alternate history. There's no time where we didn't have economic news come out at the same time that the president said a few things that probably weren't the nicest about the Speaker of the House. But it did happen at the exact same time as the economy news. So I'm going to talk a little bit about fallacies in thinking here. The problem is until we separate those, we really don't know which two caused it. I think we can suppose that it had a lot more to do with what the president said, and it is because he is leaving for the weekend and flying out of the country. The thought was that if he's going to come in here and probably lob some bombs off at the speaker, the chances are that they're not going to get anywhere before the president takes off. So we're probably going on until Monday. At least, I think he didn't get back till late Monday or Tuesday morning. He actually canceled. He was going to be gone all next week. Actually canceled some of it. So, but right now, most of the people on Wall Street are surmising that he lobbed his hand grenade and exited stage left, and probably not a good opportunity before probably Tuesday to actually get anything done. If at then. So probably looking at least into next week before anything happens. And it'd be interesting. But just the whole thought of actually putting every news story and giving a reason for it. The problem is without an alternate history where we could try both things, we'll really not know. We can always infer, but we will never truly know what it was. Was it the economic news or the president saying something about the Speaker of the House? Now, another thing that we've got going on here is someone saying that it's never been this bad in Congress. And I just hate to hear people say something that's just a giant lie. Maybe they're stupid. Maybe they never read any history books. I've got a full page of names here. John Bayliss, Button Gwinnett, George Wells, Richard Dobbs Spain, Alexander Hamilton, John Ward Gurley, Amistad Thompson Mason. I could go on for another minute and a half here and read all of them. But what do all these names have in common? They both died in duels around the Congress. These were all people that were in the Congress, congressmen, senators, that basically got in arguments and went out and shot each other. Now, of course, that kind of probably after the Civil War started to die down a little bit. But there's still been a huge amount of people up into the 1910s that were solving issues in Congress, not by yelling and screaming and calling each other names, but actually shooting and killing each other. So when I hear everything, it's never been this bad, it tells me one thing, and that is that no one really knows history in this country, or fairly few people do. And no one's really interested in either, more interested in hyperbole for whatever reasons that they have today. But just remember, it's been a lot tougher out here. And the government shutdown, not a great deal, but kind of ridiculous to think that we haven't had it worse. The worst parts of World War II, everything else. Just seems to be everybody's kind of focused on them, and now no real sense of proportion. I think kind of I don't know, almost just probably not a great way of thinking of things. It's been a lot worse is what I'm going to say. Mary Jo White is the head of the SEC. White has pushed the commission to seek admission of wrongdoing in cases. Right now, she's basically saying, if I prosecute you, I'm not going to let you just say no contest. You are going to have to admit what you did, and that's it. And that's probably a good thing out here, probably going to help along with the whistleblower law we talked about yesterday and big wins on Wall Street. But for the most part, big wigs got off with a financial slap on the wrist and got to act like they hadn't done anything real. But she's out today and last night doing one thing really right and one thing really wrong. She's brought into question whether the exchanges should continue to self-regulate themselves. A few of the things that she's finally figured out is just how many of the shares out are now every day trading. And on average for the last couple of months, 38% of all shares have not been traded on ECNs or exchanges or anything else. They've all been exchanged on dark pools. That is one seller selling to another seller, 0 exchanges. Of course, at the end of the day, all these things have to do have to be reported. But one of the big reasons that we see such a huge amount of shares at the close is that they've already been traded. All they are doing finally is reporting them. There are reporting requirements, and for the most part, since you can't prove it, they can't say that they didn't report it on time. And we were slow. We finally got it done. We put the ticket through. Since it's not on exchange, they can't show when the orders came through. A lot of these things are on the handshake and a wink of an eye, it's just not. Anyway, she says the growth of these opaque markets has hurt the bottom line of the exchanges, which makes revenue off of executing buy and sell orders tougher, and for them tougher to actually go back and put more money into technology. Now, the downside of what she did was she went and looked at high-frequency trading. And this is where she and probably 99% of Americans don't understand statistics. Probably don't have enough time to finish it up here. We'll get into the next segment. But my good friend over at Nanex, Eric Hunsader, has gone on a crusade to tell everybody why everybody is absolutely nuts at the SEC about high-frequency trading. Anyway, we'll be back in a minute, and then we've got some more neat stuff here. I'm going to show you. I wrote a little program last night, and we're going to show you the output of it.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a 3-fold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Anyway, we were going to get into the flaw of averages. This is where I have 2 of the guests I've had on the show intersect. Sam Savage wrote the book, The Flaw of Averages, and it's a great book to read. But even if you don't want to read his book, he's got several videos on his website that I highly recommend any trader that doesn't have a college course in statistics to take. He's also created a nonprofit to actually help people with statistics. He's created a lookup table that anybody can run in Excel. And it's pretty interesting because you can run basically what the Wall Street guys do, which is Monte Carlo simulators, on a lot of what you are normally working on. But probably a great thing. But one of the things in the flaw of averages on his website is a nice cartoon. And it has a little sign out there that says average depth 1 foot. And it shows this great big pond, and it's kind of a cross-section. And it's a statistician. He's walked halfway across the pond, and he's found the 2-foot segment that's 15 feet deep, and he's busy drowning. Basically, she went and looked at high-frequency trading and said, well, on average, there isn't a big problem. Well, it's not the average that anybody's interested in high-frequency trading. It's when things aren't the average. You don't care at Times Square what the traffic is like at 2 a.m. in the morning most nights. You do care at 8 o'clock in the morning if you're trying to get to work. It's the whole idea that it's the average doesn't really matter. If you're out in L.A. and you try to get on and go anywhere between 4 and 6 and probably 7 and 9 in the morning, it doesn't matter what the averages are. You can't get anywhere. You're gridlocked. Everybody's driving at 20 miles an hour. And that's what she hasn't really figured out, is that averages in a great deal of what we do in the stock market have absolutely nothing to do. In fact, they're hugely dangerous. One of the good examples he has on his website is a example of when 50 people have to come to a meeting, and on average, all of them are on time. Unfortunately, the chances of someone who's on time most of the time, we'll say that you had 50 people showing up for a meeting, and the meeting started at 9, and most of them showed up. What is the odds of that meeting actually starting at 9 o'clock if everybody had to show up on time, or everybody had to be there before it could start? The answer is 1 in 1,000. If you ever wondered why products don't come out when they're supposed to, or why meetings never start, it's because everybody always assumes that the average. And a lot of times, there's probably nothing worse than looking at averages. I don't spend a lot of time looking at 50-day and 100-day or 200-day moving averages. One, they're 90 degrees out of phase with the signal that they're after, statistically. And I've done a lot of testing. You can do the testing yourself. If you go to his website, it'll redirect you at the end of the videos to his nonprofit corporation, where he has set up with a way of working with statistics. And one of the things a lot of people bring up about what I do is I don't show a lot of times MACD and 40 other indicators with what I'm looking at. And there is a reason. If you flip a coin, you're going to have probably 50% chance of actually flipping heads or tails if the coin is balanced and everything is correct, which is, it's cool. But let's go to something more apropos, which is dice. If you throw a six-sided die, every single die has the exact same chance of showing up. But when you go to 2 die, it is drastically different. You're going to have, there's far, far, far away more ways to roll a 7 than there is any other dice, i.e. craps. So when you're looking at these kind of things, you really need to look at when they become complex. And probably don't have enough time to do it. But when we get back, I'm going to show you this little tool that I drew up. And it's you could do the same thing in Excel. But this one's just a lot easier to do because, of course, I'm a programmer. But we'll look at this when we come back. But this is all about what happens when we start adding additional indicators out there, and why so many people get what is known as paralysis by analysis. We'll be back in just a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And we're going to go and get back to what we're talking about in just a minute, but we've got Jason in Honolulu. How are you doing today, Jason?
Hey, very good. How are you, Dave?
Fantastic. Alliance Fiber Optic Products. What do you want to do with this?
Well, it's going to the windows that I wanted to establish a position. It's between the last two lows that it hit. It broke the $20 2 hours ago.
$19.50 today.
Right, and then
you've already got 1.1 million shares today. So this thing's going to have to come in. You're going to have to come in less than 1.6. And, of course, you want to close back above at $20.39 to actually get back in this thing. You know, you kind of had a sign of strength out here. I just don't see anything that really jumps up and down and says buy this thing. But do you know something about this company where you think something's going to radically change, or do you think you saw something in the chart?
I saw something on the chart that it broke the previous resistance, and then it's pulling back right now.
Yeah, so, I mean, if I was going to buy this thing, maybe I knew something more about it. I'd probably say that you want to get back into this thing just under $18. Volume's too much already. Volume's too much today already for me, and I think you probably have a good chance of this thing getting into that support level and getting back. Yeah, get back into the candle of the of August 23rd out here, which was the big volume day out here. What would you have? 2.1 million shares. Probably going to get into that candle, I think, right there, and that's you want to look at.
Now, the other thing I want to point to is that they actually have a 2-for-1 split.
Yeah, that's meaningless.
That's meaningless.
Meaningless. The only time splits tend to help anybody is if you want retail clients and stock's $400 like Apple. Then you because a lot of inexperienced traders will think, aha, I can buy a lot more of it. The answer is no. You're still going to buy 100% of whatever you could have bought. So I think that's for the weak-minded the Jedi mind trick thing. This is the stock you want to buy because of course it had a stock split. But I don't think that doesn't really hold up. You still get the same percentage of the company in a stock split.
Right.
What it does do is it is harder to make the same trade on a stock split because it does tend to attract a different clientele, and the volatility tends to fall. And that is one of the reasons probably this company is looking at the stock split is not to get more customers, but to drop the volatility a bit. Okay. I'd look at this thing, even if split adjusted, if you could get back down just under $18 and you had real light volume, I want to probably see 500,000 shares back in that level, then maybe I'd bite at it. I just don't see a whole lot. Yeah, I just don't see a whole lot here. Yeah. Okay? We're going to go right to...
Hey, have a good day.
You bet. I'm going to go to Bill in Springfield, Missouri. How you doing, Bill?
Just fine. We're having a beautiful day in the Ozarks, as you know, being a Kansas City person.
Yep. In fact, I spent many days down in Springfield, Missouri. And, you've got I'm trying to remember what the deal is. You've got the one federal prisoner hospital down there that the thing looks really nice from way far away, but it kind of seemed awful ornate for a prison hospital. But I remember driving by that several times.
Yeah, we have better cancer care in our prison here than anywhere in the world.
That's what I've heard, and I think that's where they sent. Didn't they send the big mobster there to die? What was his name?
Gotti.
Yeah, James Gotti. Yeah. Anyway, what do you like to talk about today?
Oh, I was interested in your statistics a while ago. That Monte Carlo simulator and that website.
Right.
And I didn't catch the website, if you wouldn't mind repeating that.
Okay, well, let's just go to this. I'll put it up here on Tiger TV. It's called theflawofaverages.com. And on that, you want to probably watch those videos. But it's just the flaw, F-L-A-W, of averages. And he's got a couple of videos. And at the end of those videos, each one is going to show you a link to his nonprofit corporation. And if you want to start playing with Monte Carlo simulators, he's got a really good example of how to do it using lookup tables instead of doing what I am, which is, and I'm going to show it to you in a minute, is actually have software that does all the tests I want to, not just ones in the lookup table. What he's figured out is that he can make these lookup tables have most of the effect of actually writing code and doing. And it's quite an eye-opener. Mostly what he does is try to work with people on, I'm going to show you the cartoon here too. Let me blow that up for people. I think maybe it'll come through fairly well. But what he does is work with a lot of people on Wall Street that have big hedge funds and really show them how things work. But even if you owned your own business, it's an excellent, one of his tutorials in there is how to really project real sales and sales data. So even if you're not interested in it, I think it's well worth the time spending and taking a look at it and then going to his nonprofit page where you can download the examples and load them in Excel yourself.
Okay, that's the examples. Okay. One quick question on AUY gold.
Mm-hmm.
What the June low of $8.55? What are the probabilities or that statistics saying that we might get there?
Well, you certainly got, I think you got 855 in this thing. I think you got probably an 80, 85, 90% chance of hitting 855.
There you go. Well, I've been short for 2 or 3 days, and all right, very good.
And I don't think anything more than maybe a resolution of the political issues right now would see gold right back down to 275 or even lower, or 1275.
Well,
excuse me.
You've been talking $1,200, and
I think that there's every chance that it happens. If we go back and test 1275 and the volume really shrinks up, maybe that's it. But I'd say that there's probably 80% chance we hit 1275 again before we go higher, and probably 50% chance that we go down to $1,200. So I'd rather play the odds of waiting. You can always buy it when it's going up.
There you go. Yeah. It only gets better if it goes up.
That's right. If you loved it there, you got to love it at a higher price, like they say on Wall Street. Okay.
There you go. Thank you very much.
You bet. Now, what I'm going to show you here is a little tool that I put together. And like I said, you can either do it in Excel if you go to those websites that I just mentioned. I actually just wrote some code. Microsoft has a great package for doing statistics, and they actually push it for doing statistics on websites that you create with their software. And they make of it. It's called Infer.net, but it's basically a Bayesian inference engine. And you can do a lot of different things with it. But my point in doing this right now is to go through what happens when you have a coin flip. We'll say that you had a indicator that was right just as often as it was wrong. Now, if you have just one indicator, you'd be better off using that than 2 indicators, because if you have 2 indicators, for both of them to show up true, you'd only have 25% odds of actually getting both of them correct. They're probably most of the time going to be false. One's going to be true, one's going to be false. You're not going to ever know which one to actually follow. But let's say that you take that quarter, and I'm going to bend that quarter just a little bit. I'm going to bend it and kind of fold it a little bit so that there's a 60% chance that it falls on one side. And now I'm going to go back and recalculate that. So if you, let's say you used a MACD and you used a 50-day moving average, and both of those, although they don't, were 60% accurate. What happens is you're turning a 60% accurate indicator down to a 36% accurate indicator if you weighed them both the exact same level. Now, we can get models that are a lot more complex. But what I'm going to show you is even if you had an indicator that, let's go to 65% correct. Oh, why did it make a little tune there? I'm going to do this. And of course, you're watching it at home if you're just listening. But when we go to 65, hopefully this thing calculates here in just a second. There we go. 2 heads compared to a single indicator, if they were right 65% of the time, are just going to be right 42% of the time. So as we go back, even if we have an edge on the market and both of the indicators are independent of each other, now, a lot of people will make the case that, well, if I do this one and do that one both together, they actually gain importance. Now, the question is, if you're using both of them, are they interdependent? And that, of course, can be proved with Excel, and you can go back and look and see it. Almost all the time, you're going to find out it's much more like this, that instead of using one indicator like price and volume, and making your decisions on it, when you actually continue to add more to them, the chances of having 3 heads true, even though all 3 coin flips are going to be 65% chance of heads, you're down to about 5% by the time you get to 4. You're down to 2.8% of the time when you get to 5. And the old saying is paralysis by analysis, and that's normally what happens when you don't have things that are 100% yes or 100% no. If you don't have an indicator that works at 100%, putting multiple indicators back together normally won't make your system any better. It actually makes it a little weaker, and that is because it's just like if you had a coin that was bent and you knew that you were betting some other guy across the table that it was going to hit on heads. You knew you were using a bent quarter. Why would you go to additional levels? You're going to win 65% of the time. When you go to Las Vegas, they basically have a level that's somewhere around 57 to 59% of the time slot machines will win. And you can easily see how important that is as you go down. The longer you play, right, the more you're going to lose. And that's why. And this another good example of doing it. Now, the software that I'm using in here is a thing called Microsoft Infer.net. In most of my models, I've written them in here. But it's actually quite interesting because you can just put something like first coin equals variable Bernoulli, which is basically 0.5 is 50% of the time. First coin, second time, and then you can say something like both heads. But again, probably beyond the scope of most people watching this show or listening to it. But if you go look at that flaw of averages guy, you're going to find out that he's got some very powerful stuff in Excel that's probably 95% as good as me writing something in this without all the headache. And if I probably hadn't started this stuff 2 or 3 years ago, I'd probably go back and do it. But I've already learned it all, and it's slightly a little bit more accurate. But there's lots of ways with Monte Carlo simulators to go back and figure odds out. My point in a lot of this is that probably 99% of people are colorblind when it comes to statistics, and none so much more than Mary Jo White of the SEC and high-frequency trading, because she hasn't figured out it's not the average. It's when everybody parks their cars in Times Square, how do you get out of that problem? So kudos to her on that side. Anyway, we're going to go and look at some other stocks here. If you have a call, you can always give me a ring at 877-927-6648, 877-927-6648. Was going to talk just a little bit about Eric Hunsater. And if you're interested in high-frequency trading and some of the things going on, if you might even remember the first time I had him on, I've had him on a few times. But even last week or the week before when he showed, and he was the guy that broke the case about, what was it? It was Dow Jones releasing the data outside of the room for the last Fed announcement, that it was easy. And they've dug a little bit further and found out that for some unknown reason in March, they changed the regulations to let the data out of the room as long as it wasn't sent to somebody else. And now we're right back to them locking all the data back up in that room in Washington, D.C. As the Fed, or is that New York? New York and Fed? I don't know. I always see the building. Never really wondered whether it was in New York or Washington, D.C. Anyway, if you want to check out his Twitter feed, it is NANEXLLC. But I basically emailed him to look at the flaw of averages last night, put it in his list. Be back in a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
On Tuesdays and Thursdays, I always feel like someone's watching me. And that's probably because I'm being stalked by Andy Hecht, who will come on right after this show and talk about commodities. It'll be very interesting. Doesn't do currencies. Probably the most interesting chart that I see in the marketplace today, or last night, let me put it that, was the EUO. And this thing's getting extremely interesting down here. Our last major low, at least on the ETF, goes back to February 1st, where we had a $17.56 low with 3.5 million shares. We've broken that today with, 780,000 so far. We're going to watch and see how this thing comes in. But not only that, we're probably looking at a interesting gap that this is sitting on. And that gap came on pretty monstrous volume in comparison of 5.2 million shares on October 31st of 2011. So we've come all the way back. And to tell you the truth, this is probably one of the strongest looking charts ever if you're a Wyckoff price and volume trader. This is exactly what you're looking for, and that is that something takes off with huge volume. It goes ahead and comes back. And the first time we tested it, 3.5 million shares. Okay. But now we're down here with incredibly light volume. Now, would you have to take probably a close below 1693 is a stop, I would imagine. But I tell you what, if we look at the energy on the leg up, and I'm going to zoom in here so everybody can see it. But February 1st up to March 27th, pretty strong move up. Kind of pulled back, didn't go all the way, got back up within, 13 cents, 15 cents of the high on July 9th, and then's come all the way back down. But what I really like is that you have pretty much the same dollar range between February 1st and March 27th. As you do July 9th back down to this low. And this is what I'm really looking for in the power law vector indicator number. I've got two price moves almost identical and a huge amount less energy on this last leg down. When we get here, no big surprise. There isn't a lot of volume either. Now, my volume numbers sometimes are goofed up on some of these ETFs, but it can be very. Let me check it real quick. UO, but I think they are right here. Let me just check it. Yeah, 800,000. So that is a little light, but it looks it looks pretty good. You're going to come in probably with a third or lighter volume. In an ETF, I don't look for half the volume. I look for 25% lighter volume. That we're getting down here with 30% of the volume makes this maybe one of the most compelling arguments. We've finally seen a low, a tradable low in the dollar out here that is going to last. Now, what you do want is a close back above 1756 to pull the trigger. But, I think you've got a nice moves in this over time that would work out fairly well. So there is rarely a chart that is this good looking, at least on an ETF and the relative volumes out here. The risk reward is immense in this. And, of course, all you'd have to do is accept a $1 down move. If this is a bottom, this suggests you've got a huge move to the upside, probably to maybe back up to test that $23.04 high from July 24th of last year. So hand on for Andy Heck, and I'll see you tomorrow. Same bat channel, same bat time.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest at Hertz Global as a core position for 6 months before exiting the position. A current position entered as a turnaround company with good technicals based on Basil's waveform is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to The Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to The Opening Call, just visit the front page of TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.